To RR corporates. In this video, we are discussing on latest RBI directions on prepayment of charges on loans. It's a notification dated 2nd July 2025 under RBI circular number 64. These directions aim to protect borrowers, especially individuals and micro and small enterprises, MSEs. No prepayment of charges for MSE and individual loans. This is RBI direction. So what is the background? So the Reserve Bank of India observed that regulated entities, REs, regulated entities like banks and non-banking financial companies have been adopting inconsistent practices in levying prepayment of charges. So these inconsistencies cause the customer grievance and acted barriers to switching lenders for better interest rate or for better service terms. So to address this, Reserve Bank of India had floated a draft on February 21, 2025 for public consultation, which is now finalized as the RBI Prepayment Charges on Loans Directions 2025. These directions are issued under multiple laws. The legal base, Banking Regulation Act 1949 and RBI Act 1934 and the National Housing Bank Act 1987. This is effective from 1st January 2026. So applies to all loans sanctioned or renewed on or after 1st January 2026. So applicability for all commercial banks except payment banks and the cooperative banks and non-banking financial companies and all financial institutions. So loans include both term loans and demand loans. So the key provisions are for individuals, non-business loans, no prepayment charges for floating rate loans to individuals, whether they have co-obligants or not. So very clear, no prepayment charges for floating rate loans to individuals, non-business loans. And loans for business to individuals and MSEs, no prepayment charges for commercial banks except SFB, RRB, NAB, and Tier 4 urban cooperative banks and NBFC, ULS, all financial institutions. No prepayment charges if loan amount or limit is up to 50 lakh for small finance banks, regional rural banks, Tier 3 urban cooperative banks, state and central cooperative banks, and NBFC MLs. And this applies regardless of source of fund used for prepayment. And there is no minimum lock-in period for this applicability. Suppose for dual or special rate of loans with mix of fixed and floating, hybrid, hybrid rate loans, but it is a mix of fixed and floating. So prepayment rules depend on whether the loan is on floating rate at the time of prepayment. For other loans, for all other loans which are not covered and which are not discussed, so prepayment charges are allowed as per the RE's approved policy. For term loans, charges based on amount prepaid. For CC or OD facilities, charges allowed on amount not exceeding the sanction limit if closed before maturity. If the borrower intimates in advance and closes on due date, then no prepayment charge for CC or OD facilities. Other borrower-friendly provisions are no charges if prepayment is done at the RE's own instance. All prepayment terms must be disclosed in sanction letter and loan agreement. So mention in key fact statements if applicable. So RE cannot levy retrospective charges that were previously waived off. So the conclusion is RBI is prioritizing borrower protection, especially for MSEs and individuals. The directions ensure freedom to switch lender to lender, freedom to switch lenders, and avoid hidden penalties. This will also promote a greater competition among the lenders. We have two channels, RR Corporates and RR Legal Talks. RR Legal Talks. Please do subscribe and hit bell icon so that you will not miss any of the latest updates. Thank you.